Recording in progress. Recording stopped.
Online friends, can you hear?
Recording in progress.
Switch on your videos. Shall we start? Chapter 12. Buyback of securities, that is buyback of equity shares. 4 to 8 marks possible. If standalone problem which test only knowledge on buyback, then it may be for 4 marks. When buyback is combining with other complications such as preparing balance sheet after buyback, buyback with bonus issue, buyback with redemption of preference share capital, buyback with ESOP, and the mari varasila knowledge also when it is getting tested with this topic, then it may be for 8 marks. Learning objectives. Introduction to buyback. Concept of capital redemption reserve. Accounting treatment for buyback. Ceiling on buyback. As per Companies Act 2013, section 68 to 70. So this much is what we need to learn from this chapter. Please make a note of this. Noted? Close your books and notebooks. Listen. Buyback of shares. Buyback of share refers to company purchasing its own shares either directly from shareholder by making a buyback offer, or company purchasing its own shares from the open market, which is the secondary market. So buyback of shares means company is opposite of issue of shares. Company usually at foundation level or at the lower level we have learned company will issue share and raise capital. Now by using that capital, company has earned some good amount of profit. Now it wants to buy back its share. It wants to consolidate the ownership, buy back the share. So a company will pay money and get back the shares. It can directly do so by directly making an offer to the shareholder, or the shareholders may trade the share in the secondary market. Company itself will go as a buyer in the secondary market and buy back that particular share. Everybody, shall we move? Now what will happen to the shares subsequently? Such shares bought back by the company shall be cancelled, and this will lead to reduction in share capital of the company. Say for example, we have this company. What is this? Nungambakam Fried Curd Rice Limited. This company makes issue of equity shares, say for 10 lakh rupees. So entry for that issue of shares will be, come on, bank account debit to 10 lakhs. Equity share capital 10 lakhs divided by 10,000 shares of how much each? 100 each. Are you all there? Now company will use this money for doing business, so this will employ this fund in purchasing property, plant and equipment. Right. Now using this property, plant and equipment, company does business and it generates profit, which will be reflected in the form of reserves and surplus. 10 lakhs. And that profits are cash profits. It will be there in your bank balance. Are you all following? Yes, sir. Now the company is going to buy back these shares from the secondary market. When company is going to buy back, company will have to spend and get back the share. Shares issued is liability for you. Shares purchased is investment asset. Are you understanding, everybody? So now company is going to purchase 10,000 shares, say at the rate of 10 only. Sorry, 100, which means how much it is? 10 lakhs. May I know what will be the entry made for this? Investment account will be debited and bank account will be credited, which means bank balance will reduce. This 10,000 will go off and 10 lakhs will go off, and an investment called as equity shares bought back will come. Do you understand? Shall we move? Now what will happen to these shares bought back? These shares will be cancelled. May I know how many shares you bought back? 10,000. These are all some other different company share or your own company share? Can you please tell me your company shares exist where and all in your balance sheet? It is there on the asset side which I now bought. Already it is there on the. If I intend to cancel the share, I will have to cancel both asset as well as liability. Are you understanding, everybody? The entry for this, if you have to cancel an asset, you will credit that asset account, and if you have to cancel a liability, you will debit that liability account, which means equity share capital account debit to equity shares bought back will be the cancellation entry. And this cancellation is leading to reduction in share capital. Yes, come on, everybody. Yes, so because of buyback, there will be reduction in share capital of the company. Shall we move? So we only understood what is buyback. In the introduction part, we just understood what is buyback and what will be the consequence of that buyback. Buyback refers to company purchasing its own shares either directly from the or from the secondary market. Such shares bought back by the company has to be cancelled. Everybody, we are moving further to understand concept behind CRR, Capital Redemption Reserve. Shall we move? Yes, buyback. In the name of buyback, company is making payment to its shareholder. Do you understand this? Yes, without paying money to outsiders, company is making payment to shareholders. There will be a reduction in share capital, which is called as reduction in equity. Without reduction in debt, this will cause debt equity ratio to change after buyback, and this change may trigger panic in the minds of the creditors. Everybody, they may think company is not paying them, but company is making payment to their. And you know the power of creditors in Companies Act. They have that much power to even initiate liquidation of the company. Are you understanding, everybody? So there arises here need to maintain. And hence CRR is getting created. This logic already, if you have come through foundation route, in redemption of preference share capital itself, we would have thoroughly discussed this, everybody. Since there is another route called as direct entry, so they might not have understood this in that extent. So we will rework this. We will have an illustration and try to understand once again. Shall we? Yes, sir. There is a company called aggressive growth is injurious to health. Whose health? My. Listen, everybody. Shall we start? Please listen. What are we going to understand? CRR creation, why it happens. Shall we? This company issues share 1 lakh for cash. Entry, please. Bank account debit to equity share capital. So bank 1 lakh, equity share capital 1 lakh. Did you understand this? Yes, also, this company borrows money, issues debenture to the extent of 2 lakh. Entry. Bank account debit to debenture. Bank plus 2, and here some percentage debenture will come for. Right. May I know the debt equity ratio now? Debt equity ratio. Debt 2 lakhs. Equity. So debt equity ratio is 2. 2:1. The company uses this 3 lakhs in purchase of various property, plant and equipment. 3 lakhs is deployed there. Bank balance will go off, asset will come. Do you understand this? using this asset, they generate profit which will be reflected in the form of reserves and surplus. So reserves and surplus la P&L, say we have it to the extent of 3 lakh, and these are cash profit which will be available in the form of bank balance. Irukingla? Now the company buys back this share and it cancels the share. Everybody. So, come on, equity shares bought back account debit to bank, which means equity shares bought back an investment will appear here and bank balance will reduce by 1 lakh and it will appear at 2 lakh. Do you understand this? Thereafter, company will cancel this share. Cancellation will lead to cancellation of asset as well as cancellation of liability. Everybody. Now after cancelling this equity share capital, now can you please tell me what is the debt equity ratio? Come on. Debt 2 lakhs. Ana equity edume illa 0. Are you understanding, everybody? Which means company is now literally being run only on outsiders fund. Such situation cannot arise in the company. If it arises, then clearly this debenture holder will feel insecure. Everybody, all money company earned as profit is being drained only to the shareholder without not what? Paying the debenture holder. Shall we move, everybody? Now, to maintain this debt equity ratio, we need to now create something called as Now, please listen how it is getting created. Please listen. Now, you repaid this 1 lakh out of your bank balance 3 lakh, 1 lakh you have taken and you have repaid the equity shareholders. You bought back your shares, correct? Now, come on, please listen. P&L has 3 lakh balance. Come on, everybody. Now, from this 3 lakh, I will transfer to capital redemption reserve 1 lakh. Sir, you have bought back share and cancelled, sir. Capital is reducing. Now what you are doing is taking money from one reserve and transferring to, so that the P&L will become 2 lakh, CRR will come for 1 lakh. Previously also reserves and surplus 3 lakh. Now also reserves and surplus 3 lakh. What joker activity are you doing, sir? Now please listen. The capital redemption reserve, usage of this you should have learnt in section 55 of Companies Act, redemption of preference share capital. Everybody, CRR, if at all it can be used only for one purpose. To issue a fully paid bonus share. CRR cannot be used for any other purpose. P&L? Yeah, you can buy back, you can even, declare it as dividend or use it for any purpose, free reserve, correct? But CRR cannot be used for dividend distribution. CRR can be used only for, CRR does not have any other use. When you use CRR and give bonus share at foundation level, you would have learned the entry CRR account debit to share capital. This can be used only for issue of bonus share, and if you issue bonus share, CRR will go and equity share capital will come to the extent of 1 lakh. So CRR is seen as thereby debt equity ratio is getting reinstated. This is the purpose for which capital redemption reserve is being created. So what and all we have discussed now? Come on, tell. Buyback means company purchasing its own share either directly from the, by making a buyback offer, or from the secondary market. Whatever may be the means of buyback, either directly from the shareholder or from the market, such shares only be cancelled after buyback. And this will lead to reduction in share capital. Now, this reduction in share capital will affect the debt equity ratio, because in the name of buyback, we are paying money to the, without reduction in debt. Are you understanding, everybody? So, we create something called as capital redemption reserve. Capital redemption reserve is a part of reserves and surplus. What we reduce by buying back is the capital, everybody. But what we create now is a reserve. Sir, this reserve is created from where? Another reserve called as free reserve, which is P&L or your general reserve, correct? So, for reducing capital and transferring one reserve to another reserve, how it will, be same, sir? If you think like that, the usage of CRR will answer that question. CRR can be used only for issue of bonus share. When we issue bonus share, the reserve is being converted into share capital. So, CRR is seen as capital. மேலே போலாமா? இருக்கீங்களா? Accounting treatment for buyback. Please listen. Now you have already seen it. Please listen. When you issue shares, bank equity share. Everybody, when you buy back, bank balance will reduce. Equity shares bought back will come as an investment here. Appo, can you please tell me the entry for this? Equity shares bought back account debit to bank. I never told you the entry, you are only telling the entry. Shall we proceed, everybody? So entry will be equity shares bought back account debit to bank. Number of shares bought back into buyback price per share. Irkingla? Shall we move, everybody? So come on, tell me, this entry will be made for what action actually? Buying back of equity shares. Shall we move? Now what will happen to this? After this entry, if you look at your balance sheet, shares will be there on both sides of balance sheet. Here as a liability, share capital, and on the asset side as an investment called as. Shall we move? Say we issued share 10 rupees face value for 10 rupees. So bank account debit 10. Here also it will come for 10. Now when we went to the market and bought back, we bought back the share at 12. So our investment will be carried at 12 rupees. Do you understand, everybody? Now I have to cancel this, which means I will cancel an investment of 12 against a liability of 10. For this, we will have to write entry. And this entry is for cancellation of equity shares bought back. Can you please try? We should cancel this asset. Appo, to cancel the asset, we will credit asset account. Everybody, to what extent? 12. That is the cost. Do you understand? Now come on, to cancel this liability called as share capital, what shall we do? So we will debit equity share capital to the extent of face value 10. Everybody, now come on, please tell me. Sorry, yeah, cost is 12 and the face value is 10. 2 rupees. The extra money which you paid to buy back your own share is loss. Are you understanding, everybody? We call that loss as premium on buyback. Losses should be. How to account a loss? Debit. Appo we will debit here premium on buyback account debit 2 rupees. Shall we move? Mala polama? Irkingla? So appo cancellation la capital will be debited to the extent of, but investment equity shares bought back will be credited to the extent of cost, and the difference, if it is loss, it will be debited as premium on. If it is profit, it will be credited as discount on buyback. Are you understanding, everybody? But discount is only rarely possible. Mostly it will be what? Premium. Because when I intend to buy back the share directly from the shareholder by making a buyback offer, market price of my share is 13. If I give 10, he will surrender share to me. He will tell I will sell it in the market itself. I will be getting more money. But to induce him to surrender the share to me, not to sell it in the market, I should offer more buyback price, which will be slightly above the market price. He will tell he will sell in the market. Shall we move, everybody? Mostly it will happen at what? Premium. Shall we move? Number 3. This premium on buyback is dash for the company. Loss. Capital loss or revenue loss? Loss in the ordinary course of business by performing normal operating activities called as revenue loss. Anything other than revenue loss is called as capital loss. This premium on buyback, is it a loss happening in the ordinary course of business by performing normal operating activity? Absolutely no, it is a capital loss. But this capital loss will be adjusted against what is what we need to learn. Adjustment of premium on buyback. Premium on buyback will be adjusted against free reserves. Everybody, what do you mean by free reserve? A profit which can be distributed to its shareholders as dividend is what is called as free reserve. Everybody. But for the purpose of provisions of buyback which is said in the Companies Act, that is 68 to 70, free reserves includes securities premium also. Generally, securities premium will not fit into free reserve definition. Everybody, because securities premium cannot be distributed as dividend. But securities premium, which what can we do, sir? Na? We have learned that in section 52. If you are a division 1 company, what is a division 1 company? If you are a division 1 company who will follow accounting standards issued by ICI, you can use securities premium for 5 purposes. It can be used for issue of fully paid bonus share, right of preliminary expenses, right of security issue expenses to adjust against premium on redemption of preference shares, to buy back own securities, which means own shares and debentures. Everybody, if you are a division 2 company, what is a division 2 company? They will prepare financial statements by complying with Ind AS, correct? Then this company can use SP only for issue of fully paid bonus share, right of security issue expense, buy back own securities. Are you understanding, everybody? Nowhere they say division 1 or division 2 company can use securities premium for declaration of dividend. So, generally securities premium will not fit into. But specifically this provision of buyback is telling that for the purpose of this section, free reserve includes securities premium also. Are you understanding, everybody? Shall we proceed, everybody? Now we are going to adjust this loss, premium on buyback, against a free reserve, which means after this adjustment, your loss also will reduce, your reserves also will reduce. Are you understanding, everybody? Reduction in loss, reduction in reserves. You come out with an entry. Loss generally carries a debit balance. But when you reduce it, reserves generally carry credit balance. When you use it, it will reduce. What you will do? The entry will be, come on, free reserves account debit to premium on buyback. Do you understand? Yes, sir. This is a generic entry because I use the generic word here called as. More specifically, if I have to tell what and all will be debited in the name of free reserve, then securities premium account debit, general reserve account debit, P&L account debit to premium on buyback will be the specific entry. Shall we move? Now come on, sir, you have written this in one order: securities premium, general reserve, P&L. Should we always follow this order, or we can use also P&L, securities premium, general reserve account debit? Absolutely, this order, is not told by any law, but by a finance sense. Everybody, restricted reserves are being used first. Are you understanding, everybody? Among these three, securities premium is the most restricted reserve. Shall we proceed, everybody? And among these two, general reserve is having some restriction because it is itself is a creation from P&L. Most unrestricted form of reserve is what? I will delay the use of unrestricted reserve because if I don't use it here, I can use it somewhere. Restricted reserve I will use first because if I don't use it here, then I will have to wait for the chance for using it somewhere. Everybody, shall we move? Are you understanding? Now, come on. We already learnt cancellation of this capital will reduce the equity part of debt equity ratio. To bridge this, we will have to create. So for that the entry will be creation of capital redemption reserve. Come on. Free reserves account debit to capital redemption reserve. Free reserve, for the purpose of this section, free reserves include securities premium also. So securities premium account debit, general reserve account debit. Suppose I am creating CRR only to the extent of 40. I already have SP itself for 100. I will not be touching the remaining two, general reserve and P&L. In that case, the entry will be securities premium account debit to CRR. Shall we move, everybody? These are the four entries, only four entries, which will repeatedly happen in this chapter. Everybody, unless other complications come in, such as bonus issue or redemption of preference share capital or buyback of own debenture. This is buyback of share. Sometimes they test along with what? Buyback of own debenture and employee stock option plan. In the mari complication la varlana, then these are the four entries. Are you understanding, everybody? Mala polama. So with this we have completed the accounting treatment for buyback. Now these entries will not change, but what number we need to write in this entry will be determined by using Companies Act provisions. Are you understanding, everybody? Law is necessarily interfering in accounts, because this is company accounts, so Companies Act will interfere. Are you understanding, everybody? Shall we move? In Income Tax Act, you learn the law provision and you apply in numbers and you get a result. Everybody. Similarly, here also we are going to apply Companies Act and bring out certain numbers which will be used in these entries. Shall we move, everybody? So please do summarize the discussion before we go into the law part. Come on. Introduction. Buyback. Buyback refers to company purchasing its either directly from the shareholder by making a buyback offer or from the secondary market. Whatever may be the means of buyback, the bought back shares will be only cancelled. Everybody, this will lead to reduction in share capital, that is reduction in equity without reduction in debt. Whenever there is a reduction in equity component of debt equity ratio without reduction in debt, we will create CRR. Shall we proceed, everybody? And that CRR will be created out of free reserves. For the purpose of this section, free reserves includes accounting treatment for buyback of equity shares. When we pay money and buy back the share, the entry to be made is equity shares bought back account debit to bank. What into what will be the calculation? Number of shares bought back into buyback price per share. Then what will happen to such shares? Such shares will be cancelled. Cancellation will lead to cancellation of equity shares bought back asset against equity share capital. So this cancellation of equity shares bought back is nothing but cancellation of asset and cancellation of liability. Liability account debit to asset. So entry will be equity share capital, number of shares cancelled into face value. 2 equity shares bought back, number of shares cancelled into buyback price per share. Ennapa? Difference between these two, you will see whether it is profit or loss. If it is profit, it is premium paid on buyback, it will be debited. So premium on buyback account debit. If it is loss, if it is profit, we call that as discount on buyback, it will be credited. But rarely discount happens, mostly premium happens, thereby the entry will be equity shares bought back account debit, premium on buyback account debit, 2 equity shares bought back, equity share capital account debit, premium on buyback account debit, 2. Shall we move? மேலே போலாமா? நோ ஸ்லீப்பினஸ். சுடு தண்ணி கொண்டு வந்துருக்கேன்டா, யாராவது தூங்குறதா இருந்தால் ட்ரை பண்ணுங்க. சரியா? பாட்டில் ஃபுல்லாக சுடு தண்ணி இருக்குது. சரியா? ட்ரௌசினஸ், ஸ்லீப்பினஸ், லேசினஸ், ஓகே, அது பொறுத்துக்கவே முடியாது. அப்புறமா ஊற்றிட்டானேன்னு சொல்லாதீங்க. ஃபோன் உடைக்கிறத தவிர வேறு எந்த கிரைமும் நான் இது வரைக்கும் பண்ணதில்லை. Shall we? Come on. Now this premium on buyback is a capital loss. It will be adjusted against free reserve. Adjusting entry being free reserves account debit to premium on buyback. And free reserve includes securities premium. Should we use in any specific order? There is no specific order absolutely, but restricted reserve will be used first, right? So when you have SP, GR, P and L, SP account debit, GR account debit, P and L account debit to premium on buyback. Creation of CRR. Free reserve account debit to. Shall we move into the law part? Sealing on buyback as per Companies Act. Please listen. Apart from this, what is the sealing? Sealing means limit. Shall we move, everybody? Law vandale, what first of all it is telling what? Restriction. Okay, you should not do this. You can only do maximum up to this. Are you understanding, everybody? And it will also talk about other procedural issues. That is, the cancelled share should not be reissued within so and so time. It has to be cancelled. How? And the Mari provisions and we will not be discussing in this class because it is not. Shall we proceed, everybody? So those things you will learn in your company's law class. So only the sealing limit part of that is what we will be using here, because that helps us to make quantify the entries what we make here. Shall we move, everybody? Irkingla? Speed up oda. Very small topic. போன போதுன்னு சும்மா கேட்டா பேச ஆரம்பிச்சிட்டீங்க. Sealing on buyback, please listen, which means limit or restriction on buyback. That is, limit or restriction on number of shares to be bought back. Please listen. Listen, everybody. No talking. So sealing means what? Limit. You can have this sealing also. But this is a limit beyond which you should not grow, or you should not come to Smartland. Are you understanding, everybody? Shall we proceed? There is a limit on growth. Adhe mari limit on buyback is what we are going to learn in Companies Act. Shall we move? Listen, everybody. So limit or restriction on number of shares to be bought back by determining maximum amount available for buyback. Law will restrict the amount which you can use for, which means the number of shares to be bought back is automatically getting restricted. Why this restriction is required? Why Companies Act should place a limit on buyback? What happens if there is no limit? தலையாட்டாதீங்க, சொல்லுங்க. What will happen if there is no legislation telling restriction on number of shares to be bought back? Company will buy back at its whims and fancies. Everybody, which means you need to understand buyback is payment to shareholder without paying outsider. If there is no limit or ceiling fixed by the law, then there can arise a situation where company may drain its resources only to shareholders, which may lead to a situation that company being run only on debt fund. Everybody, which should never ever happen, and that's why law is fixing this particular limit. Shall we move? Mala polama, everybody. Finally, what is that limit is what we are going to learn, or how much shares we can maximum buy back is what we are going to learn. Shall we move? Everybody. Sealing on buyback of equity shares as per Companies Act 2013. Listen, law does not tell anything directly. Only 5,000 shares should be bought back per annum direct, right? Or only 25% per annum, not more than this you should buy back direct, correct? But see what it tells. Test 1, that is condition 1, called as numbers test. It tells maximum number of shares to be bought back should not be more than, not more than 25% of paid up capital in shares. Everybody, first condition is called as numbers test. As per numbers test tells maximum number of shares to be bought back should not be more than paid up capital in shares. Shall we move? And this paid up capital will include preference share capital. Shall we? Please listen. 10,000 equity shares of 10 each fully paid up we have. How much is this? 1 lakh. 20,000 equity shares of 10 each fully paid up. It is how much? Now our paid up capital is rupees 3 lakhs. We will not take that 3 lakhs and apply 25%. It should be in terms of number of shares. So which means we will take this 10,000 and 20,000, 30,000 shares. On that we will apply that 25%. Shall we move? மேல போலாமா இருக்கீங்களா? கவனிங்க. So first test is what? Maximum number of shares to be bought back as per numbers test should not be more than of paid up capital in shares. And paid up capital here will include இருக்கீங்களா? என்னடா கால்குலேட்டரோட ரொமான்ஸா? அது PPE டா, it will depreciate. கவனி, ஸ்பீடா சொல்லிட்டா? கொஞ்சம் ஸ்பீடா முடிச்சிடலாமா? Shall we? I empathize that there will be some students like me who will be struggling initially, but they will also clear CA final like me. Okay, and I tend to go slow, right? Tomorrow onwards, don't ask to go slow. Once this basics is learnt, nothing to learn new tomorrow. So maybe that other complications may come up. That alone we will have to learn additionally. Shall we proceed, everybody? And for your information, the institute study material on this beautiful topic is there in volume 3 of your institute study material. There are 3 volumes. In that chapter number 12, right, there will be various illustration. After second illustration, third illustration onwards, buyback with balance sheet, buyback with bonus issue, buyback with redemption of preference share capital, buyback with own debenture redemption and ESOP. Like that one illustration is there. But nowhere what is redemption, what is bonus issue, what is ESOP told in the institute study material. But in exam they will ask. Right? If you miss this class, right? Because these are all there in CA foundation study material. Okay. Somehow the institute should get ready and move this buyback also to foundation. Okay. Why all other things at foundation and this alone? See, this is buyback of equity shares. There is something called as buyback of preference shares, which is what we have learnt as redemption of preference share capital. When preference share buyback is there at foundation, why mercy for foundation students? Equity share alone here. Okay, it is somewhat a topic which is inferior for CA intermediate path. தெரியாம இங்க வெச்சிட்டாங்க. Okay, adrishto if this comes you will score marks like that, right? Shall we proceed, everybody? Any moment they may change. In the subsequent attempts they may move the syllabus and foundation syllabus may further grow. Test 2 இருக்கீங்களா? The name of this test is called as resources test. It does not tell how many shares you should buy back maximum. It simply tells how much money you can use for buyback. So maximum amount available for buyback, not more than, you cannot take more than 25% of equity. Equity means what we need to understand, correct? It is paid up capital plus free reserve, and paid up capital will include preference share capital. Free reserve will include securities premium. Shall we proceed, everybody? Here, you don't take paid up capital in number of shares. You take paid up capital in rupees and add your free reserves. On that 25%, more than that you cannot use for buyback. Shall we move? Third test or third condition. Debt equity ratio test. Debt equity ratio test. It tells debt should not be more than twice of equity after buyback. Which means after buyback, debt should not be more than twice of equity. The maximum permitted debt equity ratio after buyback is what the third test is telling. Are you understanding, everybody? Sir, why we came here, sir? Why we came actually here? Why we learned all these things? Our duty is to only account for buyback. We already learned the accounting entries. But entries without numbers, no use. So to get the numbers, we should know how many number of shares maximum we can buy back. There is a limit placed by Companies Act. Right? To learn the limit, we came here. The limit is not as usual said in one line. It is told in three conditions. Numbers test, resource test, debt equity ratio. Which means all will result in some number of shares to be bought back, some number of shares to be bought back, some number of shares to be bought back. This will tell maximum number of shares should not be more than. You cannot buy more than 2000 shares. This will tell 1500 shares. This may tell 8000 shares. Everybody. அப்போ ஒருத்தன் வந்து ஒரு மேக்ஸிமம் நம்பர் ஆஃப் ஷேர்ஸ் சொல்லிட்டு போறான். நான் என்ன டிசிஷன் எடுக்கணும்? Rule of harmonious construction. Everybody. So which means it should not affect. Which means there should be a harmony among the thing. You should not defeat any rule. Are you understanding, everybody? If I select 8000, this fellow will feel happy. Third condition. But the second condition and first condition will cry. This is not harmony. Are you understanding, everybody? Appa, come on, tell me, to harmonize these three, what shall I do? Least of these three I will select. Appa, I will go for. This fellow said you should not buy back more than 1500. I am buying back only 1500. He will be satisfied. This fellow said you cannot buy back more than. I bought back only. He also is satisfied. This fellow said maximum. I bought back only 1500. All the three are getting satisfied. Which means least of the three will be the maximum number of shares that can be bought back. Shall we move? Based on that only, we will create this 4 entries. What are the 4 entries? Equity shares bought back account debit to bank. Equity share capital account debit. Premium on buyback account debit to equity shares bought back. And then the premium adjustment entry and CRR creation entry. Yes, shall we move, everybody? So this much is all about the learning in this topic. Now we need to apply this. Shall we? Before applying this, please do once again summarize the discussion. Oh, you don't want chorus? Solo? Apo, come on. அடச்சி வாயத்தோர சிஏ இன்டர் தான் வந்திருக்கிற ஃபைனல் முடிச்ச மாதிரி உட்காராத. ஓகே, அப்போ கமான் ஓப்பன். அதுக்குள்ளே வந்து கொஞ்ச நாள் தான் ஆச்சு சிஏ இன்டருக்கு வந்து, அப்புறம் காலர் அதுக்குள்ளே தூக்குது. காலர் வில் பி கட் ஆஃப். Another exam you have to write, intermediate. Thereafterwards another big daddy exam of all exams will come, CA final, right? Right? You think of writing CA final, then itself tremors will create. You know, that will be the level at which nowadays foundation it is happening. 15% result, 10%. Next time how much comes, who knows? Okay, so no chance. While a student, be a student. Okay, when you become professional, you can lift whatever you want. Come on, please. Repeat. Refers to company purchasing its own shares directly by making buyback offer or from the market. it will be cancelled, which will lead to reduction in, without reduction in debt. So we will have to create CRR. Entry for buyback. Equity shares bought back account debit to bank. What into what? Number of shares bought back into buyback price. Cancellation. Equity share capital account debit face value. 2 equity shares bought back cost. Difference if it is loss, debit premium on buyback. If it is profit, credit. Discount on buyback. Premium on buyback adjustment. Free reserve to premium on buyback. We should have in our mind, for the purpose of buyback, free reserve includes securities premium. Can you please tell me the CRR creation entry? Free reserves account debit to CRR, that is, which will include securities premium. Is there any order in which this free reserve should be exhausted? Restricted reserve will be used first. Ceiling or limit on buyback told by Companies Act under 3 conditions. First condition is numbers test. Not more than 25% of paid up capital in share. Paid up capital will include. Test 2, resources test. You cannot use more than 25% of equity for the purpose of buyback. Condition 2 does not directly speak about the number of shares. It talks about the amount which can be utilized for buyback. Correct? Equity. Paid up capital plus free reserve. Paid up capital to include. Free reserve to include. Third test. Debt equity ratio test. It tells you buy back how many ever shares you want to buy back. You take whatever money you want. We tell only one thing. After buyback, debt should not be more than twice of equity. This alone you see. That is the third condition. Let us take up question number 1. Paid up capital rupees 4 lakhs, 40,000 shares of 10 each. Debt 11 lakh 60,000. Free reserves 3 lakhs. Company decides to buy back 8,000 equity shares at 28 per share. Sir, 28 per share is what? Buyback price. May I know what is the face value? Find out the maximum number of shares that can be bought back as per each condition, which means as per numbers test, as per resource test, as per debt equity ratio test. What will be the maximum number of shares we should find, and the final maximum will be the least of the 3. Shall we? Yes, sir. Please listen. Illustration 1. What is the requirement? We need to find maximum number of shares to be bought back. Question Ilya. Oh. Right. PUC 4 lakhs. 40,000 shares into 10. Debt 11 lakh 60,000. Free reserves 3 lakhs. Decision to buy back 8,000 equity shares at 28 per share. Shall we move? Company has already decided to buy back 8,000 shares. But what we need to do here? We need to see whether the decision is within the provisions of Companies Act or it is violating. For verifying this, we need to find out number of shares, maximum number of shares as per numbers test, resource test, debt equity ratio test. Least of the 3 we should take, and we should compare that with 8,000. If 8,000 is within that limit, within the provisions of Companies Act. If that least of the 3 comes out to only 4,000 or 5,000, then this decision of buying back 8,000 is violation of Companies Act. Shall we move? Shall we start? Let us first perform the numbers test. Condition please. Maximum number of shares that can be bought back should not be more than 25% of paid up capital in shares. The first ingredient what I want here, or the information which I want here, is paid up capital in shares. Please look into the question and tell. 40,000 shares. Limit 25%. Maximum number of shares that can be bought back. Come on, apply this. A into B. 10,000 shares. So numbers test tells maximum number of shares that can be bought back is 10,000 shares. Shall we? Second condition, let us apply. Resources test. Condition please. Maximum amount available for buyback should not be more than 25% of equity. Correct? First thing what we need here is the equity. Let us compute the equity. Equity is paid up capital in rupees, which is given in the question. Come on. Free reserves 3 lakhs. Equity 7 lakhs. Limit 25%. Maximum amount available for buyback will be A into B. 1,75,000 rupees is what we can use for buyback. Correct? Using this amount, what will be the maximum number of shares that we can buy back? 1 share we will buy back at. Using 1,75,000, how many shares we can buy back? How do we get that? Maximum number of shares to be bought back is 1,75,000 divided by 28. Come on. 6250 shares is the maximum number of shares that can be bought back as per resources test. Are you understanding? Or numbers test told that you can go up to 10,000 shares, but resources test is telling maximum. Let us see what the other fellow tells. Debt equity ratio test. Shall we start this? Any doubt up to numbers test, resource test? Sure? Please listen. What this fellow said. Condition please. Debt should not be more than twice of equity after buyback is what this fellow said. சொல்லுங்க. கேட்கல எனக்கு. Shall we? Please listen. This fellow did not understand because of buyback, debt will not change. In our example, 2 lakh debenture, 1 lakh capital. We had a. This is the debt equity ratio before buyback. After buying back and cancelling the share, it became 2:0. Equity only changes because of buyback. Debt never changes. Debt should not be more than twice. This reverse interpretation pannu. Debt should not be more than twice. Equity should be at least half of debt. That beautiful communication is what law trying to strike here. Are you understanding, everybody? Shall we proceed, everybody? How the layman understand? Okay, shall we proceed? மேலே போலாமா, இருக்கீங்களா everybody? கவனிங்க. அப்போ let us rewrite the actual communication here. Come on. Interpreting this is required because of buyback of equity shares, debt does not, come on, change. Only equity changes. Right? So therefore, this phrase should be understood as, this provision should be understood as, minimum equity after buyback should be at least, come on, half of debt. That is what they try to communicate. Do you understand the communication? Shall we proceed? மேலே போலாமா? Now let us perform the debt equity ratio test. எழுதினே கவனிக்க முடியாதுடா. I don't believe in two tasks at a time. Either you write, I will stop, you tell when I have to start. The scribblings will reach you in the form of PDF. Okay, it is scribblings. Because of that only the usage is somewhat restricted for you, but I can't improvise. Okay, that too with this costly eye pencil, definitely I can't. Maybe after 2 years or something I am touching this. I used to write only in Samsung. This brand doesn't fit with me. Shall we move? இருக்கீங்களா? Come on. Debt equity ratio test as interpreted. Tell. It tells minimum equity after buyback should be half of debt. Everybody, it is saying this by communicating something different. Maximum debt after should not be more than twice. We are reinterpreting as minimum equity after should be at least half of debt. Shall we proceed, everybody? Please listen. Appo first information what I need to carry out the debt equity ratio test is the debt. Can you please look into the question and tell me how much it is? 11,60,000. Do you understand where from I am taking this number? Yes, sir. Actual equity before buyback. We calculated this in the resources test. Solupa. By applying debt equity ratio condition, what should be the minimum equity after buyback? It should be half of 1, that is half of debt. Correct? 11,60,000 into 1 by 2. 5,80,000. Now come on. Equity before 7 lakhs. Minimum equity what you should maintain after buyback is 5,80,000. Appo your equity permits maximum buyback of how much? About that much rupees only you can maximum use. Are you understanding, everybody? Shall we move? Listen. Maximum amount available. Can you please tell? It is 2 minus 3. 7 lakhs minus 5,80,000. Solra. 1,20,000. Shall we proceed? Yes, now you know how to find out the maximum number of shares. Maximum number of shares to be bought back. How do we get this? 1,20,000 divided by 28. Come on. 4,000 280. May I know the absolute value what your calculator is showing? 4285.71 is rounded off as maximum number of shares is based on the maximum amount. If you round off to the higher extent, then for that you need to pay money. You don't have more than 1,20,000. You cannot do mathematical rounding off. Please understand the context here. Shall we proceed, everybody? So this is the maximum amount available based on which you are finding the maximum number of shares. You can only round off to 4285 shares. Do you understand? Shall we move? Come on, tell me what is the result of numbers test? 10,000 shares. What is the result of resources test? 1,050 shares. What is the result of debt equity ratio test? 4,285 numbers test told maximum 10,000. Resources test maximum 6,250. This tells maximum you can buy back only 4,285. We will decide. Come on, everybody. 4,285 shares is the maximum shares that can be bought back. If that be the case, then the decision of the company to buy back is violation of provisions of. அப்படின்னு டிசைட் பண்றதுக்கு முன்னாடி கொஞ்சம் வெயிட் பண்ணு. சரியா? அப்போ if company's decision of buying 8,000 is wrong, it is violation, then what would be proper? Please tell. 4,000. We will advise the company to buy back only 4,285 shares. Correct? Okay, our advice, suppose the company follows, we will have to create accounting entries. Correct? Come on, let us create accounting entry for buying back 4,285 shares. Everybody, you don't create, you listen here. You tell, I will do. Come on. Equity shares bought back account debit to bank. Come on. Number of shares bought back into buyback price. 1,19,980. 1,19,980. Do you understand this? What next? Please tell. Come on. Shall we do the cancellation? Liability, equity, share capital, account debit. Number of shares that is being cancelled 4,285. May I know the face value of each share? 42,000. Okay. 2 equity shares bought back 119,980. Premium on buyback 130. Take calculator. Type 119980 minus 42,850 press equal to 77,130. Okay. Next, come on. Adjust this premium. Free reserves account debit to premium on buyback. 77,130. Since the question is maintaining the generosity of water, not telling which free reserve is available, I also use the generic term free reserve. That's all. Shall we proceed, everybody? Number 4, please. Free reserves account debit. How much? Reduction in equity. That is reduction in the share capital. When you reduce share capital, you credit share capital or debit share capital? Come on. You debit share capital. See in this entry you have debited share capital for. This much capital will reduce. 42,850. 42,850. Shall we move? So this is the accounting treatment for buying back 4 to 85 shares. Buying back 4 to 85 shares is because of least of the three is 4 to 85 shares. Shall we move? Yes, now please listen. நான் சொன்னேனே எழுதாதீங்கன்னு ஐயோ பாவம் இப்போ பாருங்க sir, after buying back as per debt equity ratio test minimum equity should be 5,80,000. Yeah? Let us verify. After buying back equity is paid up capital. Paid up capital initially was rupees 4 lakhs. Do you understand? Yes, sir. Now in this buyback entry I debited equity share capital to the extent of 42,000. I'll show you this number. This 42,850, see here. Right? It will reduce my equity. That is why I am subtracting it from paid up capital. Can you please tell me how much it is? 150. Yes, sir. Okay. Free reserves. Equity is paid up capital plus free reserves. Yes, free reserve initially. Now I have debited free reserve 77,130. It will reduce by 77,130. And 42,850. 1 lakh 80,000 180020. Equity after buyback paid up capital plus free reserve 1. Everybody, minimum 5,80,000 should be your equity, which means your equity cannot go below this 5,80,000. But if you implement this decision, it is going below. Everybody, what is this actually? We decided not based on resource test in this problem. We never decided on numbers test in this problem. Who told this 4265 or 4625? அவன் சொன்னது கேட்டு போனா அவன் கண்டிஷனே satisfy ஆகல. Are you understanding, everybody? Which means in debt equity ratio test we should actually look in for something, some mistake what we have done. Shall we move? Now please listen. May I know what is the minimum equity after buyback? May I know what is the actual equity if I implement this decision? May I know what is the difference? 2, 8, 830. It is because of I rounded off there. Otherwise it might be 850. Exactly the CRR. Are you understanding, everybody? For CRR I have used, but that created reserve will not come under CRR. Hey, for the purpose of this section, securities free reserve will include securities premium. Free reserve will never include. Like that law did not tell in this section also. Shall we proceed, everybody? The mistake done where here maximum amount for what? For buyback plus transfer to CRR, only this much is available. But what we did is 1,20,000 we thought it is only for idam prachana. Are you understanding, everybody? Shall we proceed, everybody? Everybody, please listen. Up to this whatever you have done, it is right. So only here you need to be careful. You should not divide that by buyback price as you did in the resource test. Shall we move? Because it is not only for buyback, this amount is also for CRR. Shall we move? Please listen. Listen. How do we do this, sir? Please listen. Can you please tell me CRR we created for how much? How much ever our capital reduces, that extent we created. Shall we move? Now please listen. Listen, everybody. இருக்கீங்களா? Let the number of shares be bought back be C. Any variable, this usually they assign X. I don't like that. So that's why C. Shall we? இருக்கீங்களா? அப்ப now come on. Please carefully take information from the question and tell. If you buy back one share, you require how much money for that? Super. Appo to buy back C number of shares, 28 into C will be the amount required. Correct? 28 C. Shall we? Whatever you buy back, you will cancel. And that cancellation will reduce the share capital not by 28. Pare. If you cancel, if you buy back, you will need 28. If you cancel, your capital will reduce not by 28. Appo 10 for one share. What is for C number of share? Shall we proceed, everybody? For all these stuff, we have maximum only 1,20,000 rupees. Right? Now find the C. 38C is equal to 1,20,000. C is equal to 1,20,000 divided by 38. 3,000 is the maximum number of shares that can be bought back, and not as you thought 4285 kadayadu. Are you understanding, everybody? Shall we move? Appo where did we make mistake na? We allocated the entire equity only towards buyback. We forgot about CRR. Everybody, CRR is only pinching us because CRR is created out of free reserve, but the reserve created out of free reserve, that is CRR, is not here. Shall we proceed, everybody? But there arises a need for allocating separate portion for what? CRR. This is the place where we need to be careful. Maximum amount available should not be only taken for buyback. It should be for buyback plus CRR. Shall we proceed, everybody? Now we need to do these entries not by taking 4285 but by taking 3157. Shall we move? Instead of doing that, let us take a fresh problem. Shall we? Anything needs to be explained again? Please do let me know. Before I give you a problem for you to execute, please do let me know if you have any doubt here. Sir, numbers test, not more than. You should pick up paid up capital in shares and apply 25%. That will be the maximum number of shares that can be bought back. Resource test, not more than 25% of equity. First calculate the equity. Paid up capital plus free reserve. In this problem, they just like that gave the paid up capital. If they gave preference share capital, equity share capital, should we include preference share capital? Yes. If they have given securities premium, general reserve, P&L, should we include securities premium? Yes. That will be the equity. On that apply 25%. This money is available only for buyback, and that you divide by buyback price to get the number of shares. This is resource test. Debt equity ratio test itself, an interpretation is needed here because of buyback. Debt does not change, only equity changes. Appo there should not be a condition posing this should be your debt. There should be only a condition telling this should be your equity after buyback. Correct? Appo debt should not be more than twice. Reverse interpret panna, equity should be at least half of debt. Everybody, that is what we are applying here. So first we will take the debt. Next, actual equity before buyback, paid up capital plus free reserve. Minimum equity after buyback, that is half of debt. Then we will compare these two, that is the maximum permitted amount, not only for buyback, also for transfer to CRR. Shall we proceed, everybody? And this we will equate and find out the number of shares to be bought back. This will be the number of shares as per debt equity ratio test, and we will compare this with the other two numbers which we got. The least of the three is the ultimate maximum number of shares which the company can. Shall we proceed, everybody? மேல போலாமா இருக்கீங்களா? இப்போ இது மாத்துனதுனால the conclusion doesn't change because it was Even previously we decided only 4285. The original decision what we have taken is company has violated. Even now we say company has violated. Are you understanding everybody? Company violate பண்ணிட்டுன்னு சொல்லிட்டு முன்னாடி தப்பா ஒரு நம்பர் நம்ம சொல்லிருந்தோம். இப்போ this is the understanding which we need to refine and have. Shall we? Question number 2 is for you. Question இல்லையா? Illustration 2. என்னடா ஆன்சரா 16,000 You should also tell me what is numbers test result, resource test result, debt equity ratio test result. Numbers test 50. Resource test 16. If you have confidence, please do journal entries for this. Sir, for computing debt equity ratio, we will not include CRR. If we include them, then the debt equity ratio will satisfy, right? Hey, what is equity da? Paid up capital plus free reserve. How can you include a reserve which is not a free reserve in free reserve? CRR is not a free reserve. CRR is not only for debt equity condition. CRR is for you cancelling the capital. Cancellation will reduce. Appo there should be a mechanism to bridge that reduction in capital. For that we create CRR. Not through equity CRR will join. CRR will become bonus share and directly it will become capital at that time. So CRR is seen as capital. Please do confirm this. They said numbers test 50,000, resource test 20,000, debt equity ratio test 16,000. So the maximum number of shares that can be ultimately implemented is 16,000. Anybody who is still doing? Done. Please help me out with the numbers. Numbers test. I want paid up capital in shares. 2 lakh shares, huh? Limit 25%. So the maximum number of shares to be bought back 50,000. Resources test. Equity, which is paid up capital in rupees 20 lakhs, huh? Free reserves 12 lakhs. 32 lakhs is the equity before buyback, huh? Maximum amount what we can take, that limit 25%. Maximum amount available for buyback 8 lakhs. Maximum number of shares to be bought back is 8 lakh divided by 20,000 shares. Debt equity ratio test. You tell, I will write. What I should take here? Debt. 40. Actual equity that was existing before buyback. We calculated in resources test, correct? 32 lakhs. Debt equity ratio condition, now only we are going to apply, that is minimum equity after buyback. Half of 48 lakhs, which is 24 lakhs. Maximum amount available for buyback and CRR B minus C 8 lakhs. Number of shares, maximum number of shares to be bought back. சியா வேற ஏதாவது சொல்லு பரவாயில்ல, ஏதாவது ஒரு வேரியபிள் அசைன் பண்ணு. y, okay. Come on, can you please tell me for buying back one share? Appo by buying back y share 40 into y. If you buy back, you will cancel. Correct? CRR for one share cancellation should be created to the extent of 10y. For this maximum, what we have is 8 lakhs. So 50y equal to 8 lakhs. Y equal to 8 lakh by 50. 16,000 shares. Least of the above 16,000 shares. So above the decision, maximum number of shares to be bought back 16,000 shares. And we will create entries for this now. Entries solunga. Equity shares account debit to bank 16,000 into buyback price of 40. 6 lakh 40. Narration. being 16,000 equity shares bought back at a buyback price of 40 per share. If you don't write, they won't provide full marks. Everybody, remembering that you are a student, so you will have to follow every protocol here. Right, shall we move? Here means not here in your exam paper. Cancellation please. Equity share capital account debit. That is 16,000 into 10. 1,60,000. 2 equity shares bought back. Come on. 6,40,000. So what is the premium here? 4,80,000 is premium on buyback. Adjust this premium. Narration. Discuss the narration. Come on. Being 16,000 equity shares bought back at 40 per share, cancelled. Shall we proceed? Come on. Free reserves account debit to premium on buyback. Come on. 4,80,000. CRR. Narration. Please discuss the narration. Being premium on buyback adjusted against free reserves. Free reserves account debit to CRR. Please listen, in the entire episode, how much equity, net reduction in equity is how much? Equity here when I tell, it means net reduction in capital. Net reduction in capital will be executed by debiting capital account. Here is the debit for capital account, equity share capital. எவ்வளோ அது? 1,60,000. Now we will create CRR to the extent of 1,60,000. Do you understand this? Yes, sir. Any doubt? Come on. Now summarize the discussion. Next problem, examination problem. We cannot take now and complete it now itself. So we will stop here. Come on, summarize. In this 1.5 hours or 1 hour 45 minute session, what knowledge you have gained is, you understood what is buyback. Refers to company purchasing its own share either directly from the shareholder by making a buyback offer or from the secondary market. Come on, these shares will be cancelled. Cancellation of these shares will reduce the share capital. In the cancellation kaga, to bridge that share capital, we are creating CRR. CRR, how it will bridge the capital? CRR can be used only for issue of fully paid. It cannot be used for either. CRR will remain as CRR. If CRR has to change into something, it will change into capital. Appo CRR is seen as what? A bridging mechanism for capital to reinstate your debt equity ratio. Can you please tell me the accounting entries to be made for this event of buyback? Equity shares bought back account debit to bank, what into what? Number of shares bought back into buyback price per share. Then cancellation of equity shares bought back. Equity share capital account debit face value. Premium on buyback to equity shares bought back. Equity shares bought back will be credited at cost. Cost face value difference is premium. Then third one. Free reserve to premium on buyback. Free reserve includes securities premium. Restricted reserve will be used first. Free reserve account debit to CRR. This free reserve we used to create CRR. That CRR is not here. This, for the purpose of this section, securities premium is treated as free reserve. CRR is never treated as free reserve. Do you understand this factor? Ceiling or limit fixed by law for telling the maximum number of shares that can be bought back. 3 tests. Numbers test. Number of shares should not be more than 25% of paid up capital in shares. Paid up capital will include preference share capital. Resource test. Maximum amount available for buyback should not exceed 25% of equity, which is paid up capital plus free reserve. For the purpose of this section, free reserve will include securities premium. Debt equity ratio test. On verbatim reading of the provision, it tells debt should not be more than. But the interpretation what we need to have is debt doesn't change because of the buyback activity. What changes is only the equity. Come on, recreate this. Minimum equity after buyback should be at least half of debt. First we will take debt and we will take equity before buyback, and half of the debt should be the minimum equity after buyback. The difference between actual equity and minimum equity is the permissible buyback, and that is permitted amount not only for buyback but also for. You will equate that and you will find out the maximum number of shares to be bought back, right? So we'll meet in the next class. If you have any doubts, please do come.
Recording stopped.